Focus 2014, the second day. The session is Japanese investment in Thailand. Will be conducted by Mr. Kanetsugu Mike, Senior Managing Executive Officer and Deputy Chief Executive of the Global Business Unit of the Bank of Tokyo-Mitsubishi UFJ, or BTMU, a wholly owned commercial banking subsidiary of the Mitsubishi UFJ Financial Group, or MUFG, since 2013. He's also Vice Chairman and Non-Executive Officer of Bank of Ayudhya Public Company Limited, or Krungsri, a subsidiary of BTMU. Please welcome Mr. Mike on the stage.
Thank you very much for kind introduction. Sawadee Kap, and good morning, ladies and gentlemen. I'm very happy to be here and would like to thank the Stock Exchange of Thailand, Bank of America, Merrill Lynch, and Patra Securities for providing me with this opportunity. Let me see. Okay. Today, I would like to share with you about the prospects of Japanese investors in Thailand. Here is the agenda of my presentation. First, I would like to briefly go through the facts about Japan's investment to Thailand and the current relations between the two countries. Then, I would like to share some of the voices of Japanese corporates on what are the Thai's attraction and the challenges for Japanese investor perspective. I will also give an overview of how we see business opportunities here in the near future. This chart shows Thailand GDP and its key drivers. The vertical bar chart is the real GDP growth rate, and the line chart shows the various components that contributed to Thailand's GDP. The blue line at the top is a private consumption expenditure, historically contributing roughly 50% to Thailand's GDP growth and being the primary driver. The thick red line is what I would like to look into further in this section. It shows the gross fixed capital formation, which historically contributed about 20%. It is a sum of a private capital investment and government spending on the infrastructure, which are 70% and 30% respectively. 20% of a private capital investment into Thailand is made through foreign direct investment. The next contributor is a net export, which I will touch on as well. So it is clear that private capital investment and export are very important for the Thai economy. Let's start with looking more into the component of this red line, capital investment, to understand Japan and Thailand's relations. Here we see the foreign direct investments coming into Thailand. The numbers shown in this chart represent the amount of a foreign investment approved by BOI over the past 5 years. The amount spiked in 2012, largely due to investment related to reconstruction demand resulting from the flood. But you can see it has been trading upwards in the last 5 years. The blue box highlighted in red is the contributions from Japan, being the investment from Japan accounts for 60 to 65% of the total foreign direct investment, being the largest contributor. This is followed by China, which only is 1/7 of the size compared to the foreign direct investment from Japan. Furthermore, it may be worth noting that many Japanese corporates have set up their regional headquarters in Singapore and/or in the Netherlands. Investments coming from such regional headquarters are recorded as investment from the country where such regional headquarters is located. Therefore, the actual figure of a Japanese foreign direct investment may be even higher than what we can see here. This slide shows more details of Japan's investment into Thailand. The blue box highlighted in red is where most of the Japanese corporates are concentrated in. It is the metal product, machinery, and transport equipment industry composing over 50% of a total Japanese FDI in 2013. And of this blue box, transport equipment account for over 80%. This means the majority of Japan's FDI is auto-related industry, followed by the electronics industry, showing the dark green box on top of the blue box. Here, I want to show you the amount of export derived from the automotive industry, and this is also part of what the investment in the previous slide has produced. Roughly half of the vehicle manufactured here in Thailand is exported to other countries, and almost 100% of this export comes from Japanese auto manufacturers. You can see the increasing trend along with investment made into this industry. Export from the auto industry is about 13% of Thailand's total export. It currently ranks second, following the electronics industry, which I may add is a close second. We believe the auto industry may become the top export for Thailand soon. Earlier, I've mentioned that next export is the third key driver for Thailand's GDP. So from the information in the previous slides, we can see the importance of Japanese investments in the Thailand's economy, contributing both in the capital investment and by export. Japan's FDI supports domestic demand, but it is also driving the export market of Thailand. In fact, as shown in the red line, the automotive industry's export is now nearly 6% of Thailand's GDP. From here, let's have a look from Japan's perspective. This chart shows where Japan's overseas investment has been heading to since 1995, and as a result, how it has accumulated until now. You can see that total investment in ASEAN is larger than that to China. Japan's investment to ASEAN has increased over the years, with Thailand, highlighted in red, being the lead investment destination, accounting for a third of the FDIs in this region. As a result of such continuous overseas investments, Japanese manufacturers' overseas revenue has increased over the years. If you look at the blue bar, Japanese corporate overseas revenue in the United States was the largest in 2001, the left bar. While it still remains one of the highest, the ASEAN countries are gaining more from Japanese corporates. ASEAN is now a crucial destination for Japanese corporates. ASEAN is a part of their overall global growth strategy, and Thailand has been playing a key role to their strategic plan. This slide compares the compositions of Japanese FDIs in the key ASEAN countries. Clearly, you can see the difference and the significance of the relationship between Thailand and Japan as compared to other countries. Now that we understand the relationship between Japan and Thailand and the strong bilateral ties, I would like to share the key driver that made Thailand an attractive business investment destination to Japanese investors. I will start with the attractiveness of ASEAN, where we compare the three major economic unions, namely ASEAN, EU, and NAFTA, you will notice ASEAN has the largest population base as seen on the chart to your left. However, ASEAN has the lowest GDP and trade volume. But please look at the red diamond dot, which is expected cumulative annual growth rate of a GDP for 2012 and 2018. Interestingly, we are optimistic of the region. We expect that ASEAN will achieve the highest growth rate in all these aspects over the next few years, especially when the AEC is introduced in 2015. As ASEAN economies opens up, foreign corporates are taking a notice and have been changing their business model, with many redirecting resources to invest in this region. With such strong and positive views towards ASEAN, many Japanese corporates have been choosing Thailand as their choice of investment. Now let's go into a bit more details on the attributes that made the Thailand a conducive investment choice. According to a survey done by the Japan External Trade Organization, JETRO, in December last year, executives of a Japanese corporate head office in Japan were asked what are the appealing factors and what are the advantages of Thailand as compared to the other countries in the region. The top most common reason cited was the market scale and the growth potential. I think this can be well explained by looking at the facts we just went over. Among other advantages of Thailand are concentration of both buyers and suppliers and living conditions for expatriates. We will look into the industry concentration later, but first let's take a look at how these advantages compare to other ASEAN countries. The slide shows the key drivers in the more details and compared to the ASEAN countries. As you can see, the market scale and growth potential is a common top answer for other ASEAN countries. Indonesia, Myanmar, and Vietnam are also highly regarded in this area. In fact, Indonesia is viewed to have the highest potential in this area. In terms of other factors, Thailand ranks number one in all these. The combination of these strengths is what makes Thailand a very attractive production base. It is worthwhile to note that Bangkok now has one of the largest Japanese expatriate communities in the world. I will touch on these more in the latter part of this presentation, but these are very important trends of Thailand which we should leverage on and take advantage of towards the establishment of AEC. The JETRO survey also asks about the concerns Japanese corporates have when investment in the region. Political risk ranked number one. The survey was done last December. Therefore, this may not be accurately reflecting the current situations as it has since stabilized. Rising labor costs ranked number two. It is presumed that the impact of the minimum wage increase that was introduced January last year seems behind this. As the flood in 2010 is still in the mind, natural disaster risks or environmental pollution problem ranked number three. Let's review this vis-a-vis other ASEAN countries. Unfortunately, these factors of risk also rank highest for Thailand. As scores of these factors are outstandingly high compared to the other countries, it is possibly important for Thailand to address these in order to keep its competitive positions as attractive business investment destination. Let me touch on the high or rising labor cost, which ranked the second in concerns. Thailand is one of the countries in ASEAN where its population is aging. It is said that the birth rate is currently low at around 1.6. Although not as low as Japan at 1.4, nevertheless, it is moving towards the aging population. It is predicted that in 2020, 25% of that Thai population would be more than 50 years old. This results in the shape of the chart showing the population by generation is getting thinner towards the bottom as compared to the other ASEAN countries where its population is still relatively young with a good working population. The active foreign investment in Thailand has created many jobs, and as a result, unemployment rate is low at 1%. Due to economic development and the aging population, Thailand's labor market has tightened, resulting in increased labor costs. With the recent increase in the minimum wage, the monthly wage of workers in the Bangkok has become one of the highest in ASEAN. Recently, more investments are heading towards east of Thailand as area there are considered to have a lower risk of flooding. However, I hear that the Japanese manufacturers often struggling to obtain necessary skilled workforce in those areas. Due to the tight domestic labor market, some companies are hiring workers from neighboring countries like Myanmar, Laos, and Cambodia. It is said that such number is now around 3 million. It is understood that the moving labor-intensive industries to a surrounding country is the directions of the Thai government, but tight labor and aging population are key concerns that need to be further looked into as it will continue to be a challenge for Thailand. While higher wage will improve the standard of living of the Thais, enhancement of value-added industry will be a challenge going forward. Shortage of skilled labor is a key challenge Thailand needs to overcome. This area has also led to the Thailand being caught in the middle income trap. Middle income trap is a term commonly defined, as you know, as a situation in which a country that is successful in lifting its economy from the status of being at least developed of a low-income country to a middle-income one, but remains at a level without much prospect of becoming an advanced, rich country. In order to advance to the next level, Thailand will need to innovate from the current model. We believe Thailand is ready for the next phase of growth. The political situation has stabilized, the economy is regaining foreign interests, and Thailand is in a good position to take full advantage of the AEC when it kicks in next year. Now, allow me to go back to the concern that ranked number one, political situation. I would like to share some results of the most recent survey done here in Thailand by Japanese Chamber of Commerce here in Thailand, JCC. According to this survey, 7 out of 10 executives managing Japanese corporate Thai operation here said that the political turmoil has no impact to their existing investment plan, while some answered they'll postpone additional investments. Many respondents said they will unlikely reduce investment. I think this is a result of a fruitful communication from the government administration to the Japanese business community. But when we asked a different question, whether they think it will have any influence to investments coming in from Japan to Thailand, it was 50-50 between no change and a decrease. While the majority of Japanese executives here in Thailand said it won't impact their own investment plan, when they think of what their executives at the headquarters in Japan are thinking, the implication becomes apparently different. Having said that, let's look back at the survey done in Japan. The executives of a Japanese corporate head office in Japan said Thailand remains as their #1 destination of investment choice for the next 3 years. The survey was done in December last year, but this is an outcome based on their 3-year planning view. So I would say, as the situation continues to be stable and the progress as planned, Thailand will remain the very attractive destination for Japanese corporate business investment. From all the information I shared until here, you can see the close ties between the two countries and the strong commitment of Japanese corporates to Thailand. So it is to the benefit for both Thailand and Japan for Thailand to solidify and enhance its positioning with the aspiration to become the center of AEC. From here, I would like to share how we view the future. The main theme I'd like to address here is to how to capture or lead the growth in relation to the establishment of AEC. Well, this is nothing new, but Thailand has the strategic advantage in terms of a geographic location. Thailand is located in the center of a greater Mekong region, surrounded by Cambodia, Laos, Myanmar, and Vietnam, and recognized as a leader in creating the connectivity across the borders. On a whole, the combination of Thailand and the CLMV will be comparable to Indonesia's population of 240 million. Being at the center, connected with the vertical and the horizontal corridors, Thailand can serve as the main hub. Future development in the transport and the logistics sectors in this country will facilitate more cross-border trade and reduce logistical costs. With such geographical advantage, as well as other attractiveness and challenges which we went over, what are the requests from Japanese corporates to the Thai government? Number one is the stability of the political situations. This is not a surprise for it to be their top request. Number two, however, is interestingly, as you recall, Thailand is said to have the most adequate infrastructure among other ASEAN countries. But this indicates the Japanese corporates think there needs to be more in the development of infrastructure. There is a critical need for better infrastructure, such as land transportation, including national roads, dual-track railways, as well as improvement of an issue on water management, which ties to the third-rank business risk about a natural disaster. Number three is related to a trade within a region. I would like to look into this a little bit further. This again is from a survey done by the Japanese Chamber of Commerce here in Bangkok. Executives of a Japanese corporate in Thailand believe exports from Thailand to other ASEAN countries will grow. You can see that 7 out of the top countries where they view as a prospective export market for their Thai operation in the future are ASEAN countries. While Japanese corporates are looking at each country separately, they view AEC as a combined market and have high expectation towards its establishment. This is a chart of a good tariff. Some say that good tariff among ASEAN members are already close to zero. Therefore, there will not be much positive impact to trade volume as a result of establishment of AEC. However, if you look at CLMV tariff as shown in the green line, I think there is still some room to work on. Furthermore, tariff is an important driver, but there are other obstacles that can drive trade if such can be removed. Here, I would like to share what Japanese executives in Thailand are expecting towards the implementation of the AEC, again based on the survey done by JCC here in Thailand. Their top 3 answers all relate to a trade within the region. This ties to the view and expectations of the increase in the trade volume within the region. Elimination of import tariffs in the CLMV is ranked second, indicating if this can be lowered, it will likely further drive trade between Thailand and CLMV, thus supporting their Thai +1 business strategy. But you can see that the other 2 expectations shown on the slide are obstacles other than tariffs. If these obstacles can be removed or improved, it will surely enhance more trade in the ASEAN region, where we believe Thailand can gain the most. The other point, which we think is a big advantage, is the accumulation of the industry. This was included as a reason Japanese corporates choose Thailand, but I would like to explain how big of an advantage this is, as this is one of the keys for Thailand being positioned at the production base of ASEAN. This slide shows the number of the companies in Thailand in the automotive industry. The left pyramid is Thailand, showing the number of the companies with manufacturers at the top and the supporting Tier 1, Tier 2 suppliers. Total number of companies is 2,348, hiring more than 500,000 employees. To illustrate how big this is, the right pyramid is that of Indonesia as a comparison. Total number of companies is only 820, hiring close to 100,000 employees. The current trend is that more and more Japanese small-medium corporates are coming into the Thai market, which will further strengthen the accumulations of the industry. It may be possibly worth noting that while the number of manufacturers in Thailand is smaller than that of Indonesia, a number of suppliers in Thailand is 3 times larger than that in Indonesia. This supplier cluster, incompatible to other ASEAN countries, are built here in Thailand. Such accumulation is a big advantage for Thailand in AEC. Some have questioned whether it really will be Thailand who will benefit most out of AEC. A recent news article said that Thailand risks losing #1 spot as the biggest car market in Southeast Asia. While the number of produced vehicles in Indonesia is currently roughly half of Thailand, it is true that Indonesia is viewed to have a higher growth rate and therefore will be catching up to the market here in Thailand, mainly driven by domestic demand. Vehicle produced in Indonesia is all towards domestic sales, but on the other hand, half of cars manufactured here in Thailand is for export to other countries. The current accumulation of the industry in Thailand has been built over many years, and we believe that Thailand can leverage on these trends to expand its positioning in the AEC. But it needs to work hard to solidify its positions. With the tightening labor cost, many Japanese corporates are moving a certain part of the manufacturing process to neighboring countries while maintaining the key process in Thailand. This is another move that leads to increasing trade within the region. Therefore, infrastructure enhancement, as well as easing the trade-related obstacles we mentioned earlier, will be important to support such move of Japanese corporates and enhance Thailand's positioning and growth in the region. Going forward, technology transfer will be an important factor for Thailand to develop the value-added industry, which shall lead Thailand to the next step of growth and possibly differentiate with Indonesia and other neighboring countries who likely are catching up in terms of the size. We believe further accumulation can provide greater opportunity to provide greater and more diverse technology transfer. In relation to technology transfer, let's take a look at how research and development function of Japanese corporate is in Thailand. As you can see from the survey, not many Japanese corporates have yet established R&D site or technical center in Thailand. When asked what are the important factors for their consideration to establish a R&D site or technical center, more than 7 out of 10 Japanese corporate executives answered competent personnel. Therefore, the education system will be key to attract the more technology transfer to Thailand. In the meantime, when we asked the purpose of establishing R&D site in Thailand, improvements of production technology rank first. It is also worth noting that second-rank reason for those who have already established R&D site here in Thailand is the development suitable for the market in ASEAN. There are those saying the purpose is product development suitable of the market in Thailand, but much lower than those saying in ASEAN. This also supports the fact that Japanese corporate view Thailand as the core of their operations in ASEAN. To conclude, Japanese corporates view that Thailand will continue to have advantage in this region. However, there is a risk of Thailand falling into the middle-income trap due to high or rising labor costs and other factors. In order to avoid such situation and to continue to attract Japanese investment and achieve economic growth, further development of infrastructure, taking a lead to remove the trade-related obstacles to drive more efficient trade flows in the region, and improvements of education system in order to attract more technology transfer to develop the value-added industry are all very important. Every month, about 50 Japanese corporates come to us asking for advice on starting business in Thailand. While companies in auto-related industries and electronics industry are still coming, we see increasing number of companies from a different industry sector are coming to Thailand too. Also, we see increasing trend of a small, medium-sized corporate considering entering this market. In order to successfully enter this market, they are always looking for trustworthy Thai partners. We support such customers by providing non-financial services such as business matching. By supporting our customers' growth, we at the Krungsri, as well as Bank of Tokyo-Mitsubishi UFJ, hope to continue to contribute to the growth and success of Thailand and this attractive region. Thank you very much.
Thank you very much, Mr. Kanetsugu Mike. And now, may I open the floor for a Q&A session? So anyone who has questions, please raise your hand for microphones or write it on a paper and pass it over. Okay, I also have a few questions here with me. If the floor has no question now. All right. Given what has happened in Thailand, are you concerned if Thailand's planned election is delayed from maybe 2015 or early 2016? How much are you concerned?
Oh, okay. Well, as far as the political situation is stable as it is, I do not think the Japanese corporates will be concerned about making decisions as to our investment in Thailand. So if the situation is progressed as planned, without surprise, okay, the situation, things should be all right.
So
that's my view.
The delay shouldn't be as much of a concern as long as the implementation is...
Yes, because the roadmap is clearly presented and defined, and there are many communications made by the government administration to business communities, including Japanese business community. And they really understand what's going on right now. So I think that shouldn't be an obstacle for the Japanese corporate to make a further investment now.
All right, followed by this question. For the upcoming new cabinet next month, as a Japanese investor, what are the top 3 economic policies you hope to see?
Oh, well, I feel like I'm become a Thai. Well, I think a couple of requests as mentioned in my presentations made by the Japanese corporates. I think the first is the infrastructure, because I believe that Thailand is a core of Great American, and in order for the Thailand to take advantage of being the center of the American, the infrastructure development and including enhancement of logistics are a very important part. And also, in order to address the concern they had about flooding, we experienced in 2010, water management is coming next. And then we hope that successful economic policy will improve the sentiment of our people, because we hope that the recovery of consumer confidence in the economy will prop up the economy, so that would benefit the Japanese corporate and other businesses here in Thailand.
Okay, and the last one here is, since you have stayed in Thailand for quite some time, what do you like the most about Thailand?
I myself? Oh, well, I'm not staying here that long. UT Krungsri, pet duan, just 8 months. But what I was impressed is, first of all, hospitality of Thai people.
Right.
I am living here by myself alone, leaving the family in Tokyo, but I really enjoyed living here, and I really enjoy working with my Thai colleagues. So I think the first come is, in my personal impression, the hospitality, omotenashi by Thai people is the first come.
Okay, and according to your information, more of SME-sized Japanese companies have started to come to Thailand. What would you suggest to Thai SME to prepare to the more intense competition?
Right. I think we are providing the service of a business matching, and that there might be some concern about Thai small, medium, small corporates, about the many Japanese small corporates are coming to Thailand. But I believe there are always a partnership among those corporates, and in fact,